The topic for today is how to make the best of Moneyworks for me. So what I'll try to do in this webinar is try to show you both some of the registered features that we have on our site, that is the features which are available to registered users, and also some of the very useful paid features that subscribers have access to. Okay, so let's just begin. I'll just log in as a paid user just to give you an idea of some of the features that we have for you. So as you are aware, this is the evaluate, or once you log in, this is the page that you are led to. I think this will be of great interest for all the registered users. Subscribers must have already had a look at these features, but I'll just take you through these so as to give you a better understanding of how these features work. So the two very important features that we have for you are the Moneyworks for me filter and the decision maker. Now, how do these features help you? Well, if you want to find out the best stocks, you should start with the Moneyworks for me filter. Whereas if you have a stock in mind, and if you want to know is it the right stock and whether you should go ahead and invest in it, you can use the decision maker. Okay, so let's just start with the Moneyworks for me filter, and I'll show you how you can find a very good short list of companies to invest in within minutes. Okay, so how the Moneyworks for me filter works is through three very simple steps, which are: A, you have to choose a category; B, the fundamental strength; and third is the MRP. Okay, so let's take one step. Let's take it as one step at a time. So I'll choose the category. Here I'll just keep it as all companies. The default selection that you see here is all companies. I'll just zoom so that it will be more clear to you. Yeah, I believe it will be more clearer to you now, the screen. So what I'll do is I'll just keep it as all companies for the time being. You can also select particular sectors. So if you are interested in looking at just say FMCG sector, or maybe the capital goods sector, you can select particular sectors. Or if you want to select within indices, you can look at finding companies within indices. Okay, so what I'll do is, for ease of use, I'll just keep it as all companies. Second thing that you have to do is pick the fundamental strength, right? So here the default selection is green or very good. Now what do we mean by fundamental strength? At Moneyworks for me, what we have done is we have looked at the 10 years financial performance of the companies and rated them as green, which means the performance has been very good, or orange, which means the performance has been somewhat good. So there have been some good years followed by some bad years, so on and so forth. And red, which means not good, so that means the performance has not been good. So what we want ideally are the best companies which have done very well in the past, so I'll keep this as green or very good. And the third part is to select the MRP range. Okay, now what is the MRP? Now MRP is the right value of a stock. Okay, right value or the intrinsic value. So what we say is, once you know the MRP or the right value of a stock, you should buy the stock at a discount to the MRP. Okay, so we call this discount as the margin of safety, right? So ideally what we say is you should always buy a stock at a healthy discount to the MRP. Here the default selection is 25 to 50% below MRP. So what we are saying is, usually if you get a good company at a 25 to 50% discount below the MRP, that is a good company, or that is a good point to invest in that company. Okay, if the market is in a bearish phase, you can even select 50% below MRP. Okay, and if it is in a bullish phase, you might not find many companies at such a high discount, so then you can go for a 0 to 25% below MRP range. So ideally we'll just keep it as 25 to 50% below MRP for the current moment. Okay, and I'll just click on search, and there you have it, right? Within a minute I have a list of 20 companies which I can further study and further decide whether I should go ahead and invest in them. Okay, so as I said at the beginning, the Moneyworks for me filter basically helps you to arrive at a very useful shortlist of companies within minutes. Okay, I was explaining this to you and I did this in like 5 minutes. So actually when you try it, it will be done by in like 1 minute or so. Okay, and as you can see, it includes very well known names such as BHEL, PNB, Infosys, Sasagoa, Indian Bank, so on and so forth, right? So it is a very good list that you can start off with Okay, so now that we have a very good shortlist in front of you, what do you do next? Okay, so what I can do is I can just click on any company and have a look at its decision maker. Okay, now decision maker is the second tool that I told you about. Okay, which basically helps you to understand whether it is an investment worthy company and whether you should be investing in it. Okay, I'll just wait for the screen to load up. Yeah, so there you have it, the decision maker of Infosys. So again, the decision maker is divided into three very easy to understand parts. Okay, now what are these three parts? What we say is, whenever you want to invest in a company, you have to think, or you have to answer three very important questions. Okay, these are: A, is it the right stock? B, is it the right price? Okay, is the stock available at the right price? And C, is it the right time to buy the stock? Okay, so I'll just take you through each part one at a time. So first answer that we want is it the right stock? To get this answer, we look at two things: the 10-year X-ray, which is basically the financial performance over the last 10 years, and the long-term prospects. Okay, so we want to check how the performance has been on these with respect to these two parameters. Okay, so for Infosys we can see that it is green or very good. Okay, so ideally what we want is both these things should be green. So that is the case with Infosys. So that tells me that it is the right stock. Second thing that we want to check is it available at the right price? Now here what we do is we give you a very easy to understand slider. So here you can see this is the MRP, or the intrinsic value of Infosys. This is the DP, or the discount price, considering a margin of safety of 30%. So what we say is, if the current market price is below the discount price, it is available in this zone, it is in the buy zone. Okay, so that is a good time to consider buying the stock. If the stock is between the discount price and the MRP, in this orange zone, it is in the hold zone. Whereas if the stock is above the MRP, in this red zone, it is in the sell zone. Okay, so very easy to understand: buy zone, hold zone, and sell zone. Okay, so with Infosys, the current market price is just above the discount price, which tells me that the stock is in the hold zone, and maybe you might consider waiting for some time until the current market price comes below the discount price. Okay, and then you can consider buying the stock. So that is about the right price. And the third and a very crucial part is the right timing. Okay, now what is the right timing? Well, in this part we give you very easy to understand timing signals. So what we have done is we have combined fundamentals as well as technicals. So the first two things that you saw was part of the fundamental analysis, whereas the last part, which is the right timing part, is based on some technical indicators, right? So if the stock is in the buy zone and the technical indicators give you a buy signal, this timing signal will generate that buy signal. Okay, the timing signal will tell you to buy. Okay, and that is the time when you will consider buying the stock. Okay, if I had to just show you the timing signal or timing chart of Infosys. Okay, so this is the timing chart for Infosys. So as you can see, a buy signal, okay, was generated for Infosys sometime in June, July, sometime around that somewhere around that time. A buy signal was generated for Infosys, after which it fell a bit down. Okay, the price saw a bit of a fall, and again it has recovered now, and it is currently in the hold zone. Okay, so we give you very easy to understand signals such as buy, consider buy, strong buy, consider sell, and strong sell. Okay, so here what we had got was a consider buy signal and not a strong buy signal. So when you get a strong buy signal, that is a very good time when you can consider buying the stock. Okay, so as you can see, it's very easy to understand these three elements. So whenever you have a stock in mind, or whenever you want to make a decision whether you should go ahead and invest in a stock, all you have to do is get answers to these three very important questions, which is get the right stock, get the right price, whether it is the right stock, whether it is the right price, and whether it's available at whether it's the right time to buy the stock. Okay. Now, while it is so easy to understand, all these inputs are supported with a very robust and in-depth analysis. Okay, so it's not just that we have just gotten these inputs and presented them in front of you. If you want to check out why this 10-year X-ray color coding is green, or why the long-term prospects are green or very good, you can just click on these individual elements and it will lead you to the 10-year X-ray of Infosys. Okay, so what is the 10-year X-ray? Now, when you want to invest in a stock, it is very important to understand, or very important to find out whether it is a fundamentally sound company. One very important criteria that you should check out for is how has the financial performance of the company been. Now, we say you need to look at the financial performance over the past 10 years because over a period of 10 years the company would have gone through an entire business cycle, so you will know how its performance has been during the good times as well as the bad times, right? Now, one problem that everyone has these days with financial statements or financial numbers is that it's a lot to understand, right? I mean, if a layman like you and me were to just go ahead and check out the financial statements, we would just lose our mind, right? Because there is just rows and rows of data and it just becomes almost impossible to make head or tails out of it, right? So in order to simplify this entire process, what we have done is we have looked at the most important parameters that you should look at, right, when you invest in a company, and those parameters we have presented to you in a very easy to understand color coded format, and that is what the 10-year X-ray is all about. Now, for all the registered users who are present in this webinar, what I will show you is the free 10-year X-ray. Okay, now this is available free of cost. You do not have to pay. You just have to register on a site and you can view the free 10-year X-ray of any company in your mind, okay, within the BSE 500 list, right? So I'm just showing you the free 10-year X-ray part. Even the subscribers, if you just have heard about some company and you do not want to extinguish your account for that company, you can just check out the free 10-year X-ray. Okay, and if you find that it is interesting and you want to check ahead, or you want to go ahead and check further, then maybe you can use the 10-year X-ray Pro. So this is the free 10-year X-ray where you can see the 6 important parameters we have for you. The top we have net sales, okay, which tells me net sales and the year-on-year growth rate. So I am looking at how the net sales have grown over the years, which tells me whether there is a growing demand for the company's products and services. Okay, what we have done is, again, as I said, color coded them. The second portion is the EPS. EPS is basically earning per share. So it's basically profit divided by the number of shares. It tells you what is the share of profits that you have as a shareholder. So again, I am looking at the EPS figures and the year-on-year growth rates. BVPS is book value per share. So the company has to increase its capacity, so it needs to reinvest money back into its business, and that's how the BVPS keeps on growing. So I am also looking at a company which keeps on reinvesting some money to increase its capacity to cater to the growing demand, and that is what is BVPS. This is followed by net operating cash flows, right? Because I don't want a company who is just earning profits and not generating any cash from it. I would want to see whether the company is also generating cash or operating cash flows from the profits that it's earning. Okay, next is return on invested capital, or ROIC. This tells me how efficiently the company is utilizing its funds. Okay, so that tells me the management efficiency at utilizing funds. This is followed by the debt to net profit, which tells me in how many years can a company repay its debt at the current level of net profit. Okay, so these are the 6 most important parameters which you should look at for any company that you have in mind before investing in that company, right? And primarily what you have to do is just look at the color coding. Okay, so here you can see it's largely green, so that tells me that the 10-year X-ray color coding is green. Okay, now this is the free 10-year X-ray that I was showing to you. Okay, so if you are a registered user, you can view this free 10-year X-ray without any cost. However, if you want to view further details, Okay, so apart from these 6 important factors or 6 important financial parameters, there are some other critical parameters that also that you should also look at. Right, there are some other key financial ratios, so they are part of the 10-year X-ray Pro. Okay, so I'll just click on 10-year X-ray Pro and you will understand what I'm talking about. So 10-year X-ray Pro includes the free 10-year X-ray part, and then it includes some very crucial financial ratios. Okay, what are these financial ratios? It includes the profit margins, so operating profit margins and net profit margins, how have they been over the years. It includes ROE or return on equity. Okay, so what is the return that the company is generating on the shareholders funds. Then you have debt to equity ratio. So again, it is a very popular ratio that people look at when they are trying to assess what is the debt level of the company. And then you have the working capital days and net working capital days, okay, which are trying to gauge what is the efficiency of the company and how efficiently does it use its working capital, how efficiently does it collect its receivables and manage its inventory, and so on and so forth. Okay, so these were the key financial ratios. The third part of the 10-year X-ray Pro is the management X-ray. So registered users, if you are not subscribers, you won't get access to this, which is a very important part, which is the management X-ray. What we have done in the management X-ray is we have assessed the management based on some 5 important parameters. Okay, that is corporate governance, board credentials, promoters holding, transparency and integrity. Okay, so for Infosys you can see, apart from promoters holding, which is orange, all other parameters are green. Okay, which is a good sign. So apart from the management assessment, the other thing that you have in the management X-ray is a graph of the promoters holdings and the percentage of the holding that has been pledged. Okay, now this is a very critical thing that you should look at, and I think be it a registered user or a subscriber, I think every investor should always do this, and that is look at what is the pledging percentage. Okay, and it is one of the most critical things. Why? Because over the last 1 or 2 years, what we have seen is numerous companies and the stock prices have crashed like anything. Reason being, the promoters had pledged a large percentage of the shareholding. Okay, and what happens is, if they have pledged it, they basically borrow money and pledge the shares as collateral for the loan that they have taken. Now if the share price falls a bit, the financial institutions can resort to selling the shares in the open market, and as a result the share price falls like anything, and the retail investors are left with huge losses in the portfolio. Okay, so that's why you should always look at pledging. It's not very evident here because for Infosys the pledging is 0%. What I'll do is I'll just show you the management X-ray for maybe Kingfisher. I think that is a very good example, Kingfisher Airlines. And I'm sure Kingfisher is a name that has been in the news for all the wrong reasons in the last year or so. And here you can see the pledging percentage. Okay, the promoter holding at one point was 66%, and today it has come down to just 36%, of which again 90% is still pledged. So in fact, if things don't improve, you can see this promoter holding coming down further in the next few quarters, right? So the moment you see this red line, it's just a warning sign that you should consider staying away from the stock, because you don't know when the things will turn for the worse, and the financial institutions can resort to selling the pledged shares in the open market. Okay, so keep that in mind, a very important input, that is avoid companies with such high pledging, right? So all the registered users, please note, if you want to make good investment decisions, it is very critical to look at the management X-ray, look at the other financial ratios that I just showed you. So do consider subscribing, because that only after subscribing will you get access to the 10-year X-ray Pro. Okay, the second part is the future prospects. One small one point that I forgot to mention, once you have checked the 10-year X-ray Pro color coding, okay, what I would request you to do is to save your assessment. Okay, once you just scroll down, you will see the Moneyworks assessment, which we have given as not good or red for Kingfisher. What you can do is you can save your own assessment. So if you feel that it is not right, it is green, or if it is orange or red, you can just click that and save it. Okay, and it will automatically be saved to your watch list. Okay, so that it is available for your easy reference later on. Okay, so you don't need to keep on coming back to the screen and check out what is the color coding. Okay, so I just save that. I'll just go back into Infosys and show you the other features. So the second part is future prospects. What we have done here is we have color coded again the short term future prospects and the long term future prospects after understanding the company, after reading its annual reports, after analyzing the future prospects of the company, right? So we have an analyst team who keeps on tracking these industries and companies and giving you updates, timely updates, right? So what you see here is the Money Works For Me assessment. Okay, so short term Money Works For Me assessment is somewhat good. Community assessment is what is the larger audience at Money Works For Me thinking about the short term prospects for Infosys. So the community assessment seems to match with that given by our team, which is again orange is somewhat good, whereas long term both Money Works For Me as well as the community assessment is very good. And what you can do is you can just again save your assessment so that it is available for you in your watch list and your bot list. Okay, how do you arrive at this long term prospects of Infosys? Well, we have a company pulse report for you. Now the company pulse report gives you all that you need to know about the company's business in a very easy to understand non-jargonized format, right? So what we have tried to do is try to make it very simple, try to explain to you what is it that helps the company earn money, so from which industries it is generating revenues, from which geographies, by providing what services, and so on and so forth. We have analyzed the 10-year X-ray. So why has the company done so well in the past, or if it has not done so well, what are the reasons why it has not done well, right? And again supported that with very easy to understand visual images, right? And then we have the long term future prospects, which tells you what will drive the growth of the company going ahead. Okay, so is it some new order that the company is getting, or something in the business model which will help it grow its revenues going ahead, right? So all these things, then what are the concerns, you can read all these things in the company pulse report, and then you can take a call whether the future prospects are green, orange or red. Okay, so once you are done studying all this, you can just have a look at the price calculator. I already showed you the slider in the decision maker. The price calculator just presents all those details, all the MRP and the discount price with the other details. So what are the estimates that we have used? So we have used certain figures and certain estimates to arrive at this MRP. You can just have a look at this. So our team expects that Infosys will grow its EPS at a rate of 15% going ahead. Okay, the future PE will be somewhere around 20. So if you don't agree with this, you can just tweak it. Okay, so as you can see, what I have done is I have tweaked my estimates. I feel that the base EPS should be lower, the expected EPS growth rate should be higher, right? My PE, the PE that I feel it will command in the future is higher. So I have arrived at my own MRP, which is 3400, and my margin of safety. So again, I can just tweak this. The margin of safety I can change, and you can just play with these numbers to arrive at your own money MRP and discount price guidance. Okay, and then what I can do is I can just save this to my watch list. Okay, so now all the things that I have saved, whether it be the 10-year X-ray color coding or the future prospects color coding and the MRP and discount price, this will be available for my reference in my watch list. Okay, and I can refer it at any time. So that was about the different elements. All this to just tell you that all the inputs that you have in front of you, right, which are so easy to understand and which you can just check out in like a minute, are supported by a very detailed and a very robust framework. Okay, so that was about Money Works For Me filter, decision maker, and the different elements. Now what I'll do is I'll just show you a very new product that we have launched, which is Nifty 50. Okay, now some of you might be already subscribers of this product. Registered users, once you register, you also get access to the free part of this, which is Nifty 50 Superstar. So you get access to this user interface, but you don't get to see the other details. Okay, you don't get to see the MRP, you don't get to see the timing signals, because all those are paid features. Okay, so what is the Nifty 50? It basically helps you to find the best out of the Nifty 50 stocks. Okay, and the thing is that it's very, I mean, this is something that many of us do, is that in the quest to find the next multi-bagger stock, okay, or in the quest to find the next stock which will make us millionaires overnight, we overlook these safe, these established companies. Okay, we keep on investing in some small cap, some micro cap, some penny stock, and we hope that it will grow or it will become the next big thing, but it never does, and you keep on sitting on huge losses. in the meantime overlooking all these wonderful established companies which might not give you humongous returns, but which show very good growth over a period of say 3 to 5 years, okay, and give you good consistent returns. So Nifty 50 Superstars is basically helps you find out these stocks, best stocks from the Nifty 50 list, helps you not to overlook these established players, okay. So as you can see, it is just a one page interface where you can get all the Nifty 50 stocks. You can view all the Nifty 50 stocks in one glance, okay. Again, we have tried to keep the format same, so it's very easy to understand. You have to find out whether it is the right stock, whether it is available at the right price, and whether it is the right time to buy the stock, okay. So again, I won't go into the details and try and explain to you the format, because I've already done that in the decision maker. So as you can see, it is a list of all the Nifty 50 companies, and what I can do is I can shortlist companies within these 50 companies as well, okay. How do I do that? I'll just click on this sort arrow, then I will just click both. So I want just the green companies, okay, fundamentally strong companies. I want companies which are at a 25 to 50% discount to MRP. So we did a similar thing in Moneyworks filter, right? And I want companies which are giving me buy signals, okay. So I'll just click all the buy signals and say apply, okay. So I get a list of just 3 companies. Now 3 companies which are fundamentally strong, the price is in the buy zone, and a timing signal has also been generated for this stock, okay. So maybe you can consider buying the stock after studying it a bit, after understanding whether it is a good stock to invest in it or not, right? So as you can see, within seconds I just arrived from a list of 50 good companies to a list of 3 awesome companies where I can consider investing in, okay. So I'll just remove all these filters. Apply. Okay, now what you can also do is just group these companies according to sectors. So maybe if you want to have a sectoral view of the different companies, you can just have a look at them according to that, right? So a lot of companies in the banking sector, then a couple of companies in capital goods, and so on and so forth, okay. Now if you don't want to do all this, okay, if you don't want to get into sorting as well, what you can do is just refer to these lists given at the top of the page, okay. So you have Nifty stocks at discount, you have top Nifty timing alerts, and most popular Nifty 50 companies, okay. So what these will help you do is not even go through all this. It's just like a quick list which you can refer, just check out the decision maker for these companies, okay. So I can just click on BHAL and it will show me the decision maker for that particular company, and I can take a quick call, okay. So this is how basically we are trying to simplify your investing experience. So now that we have covered some of the very critical features, I'll just go to a very important feature that we have, something that both registered users and subscribers should be using for sure, which are the portfolio managers, okay. Now I'll just go to my the bot list that we have on Moneyworks for me. Now what you'll notice is the bot list that we have on Moneyworks for me is slightly different than you would see on other sites. Reason being, what we have tried to do is try to give you some very important inputs with respect to your portfolio, okay. So we have some useful graphs for you at the top of the page which are about portfolio quality, okay. So it tells me what is the percentage of my portfolio which is in green or very good stocks, what is the percentage in orange or somewhat good stocks, and what is it in red or not good stocks, okay. So ideally I would like this to be largely green and maybe some orange companies, but as you can see I also have invested in a red company, okay, which is Billcare and Suzlon Energy. So maybe I can consider just removing that company from my list, okay, maybe selling out my allocation, right. You can also have a company allocation view. Why is this important? Because we always say that you need to have a diversified portfolio, right? So you should not be invested in say more than 20% in a particular stock. Now in my case I am invested in ACC to the tune of 24%. So maybe I need to consider reducing my exposure to ACC, right? Because what happens is, if a large chunk of my portfolio is invested in one stock, and if that one stock falls, my entire portfolio will suffer. Okay, so that is the logic behind having a sufficiently diversified portfolio. Similar logic goes for sectors as well. So ideally I should not be more than say 25% in a particular sector. Here I am to the tune of 27% in construction and infrastructure, so I can maybe consider reducing my exposure to this sector. So these three graphs will basically help you have a good diversified portfolio and also ensure that you are invested in green companies. Now here is my detailed bot list where I can see all the other details, which is quantity, average buy price, unrealized gains. Money Works for Me assessment, all the subscribers can see this long term prospects part as well as the timing signal part, whereas the registered users have access only to the 10-year X-ray part. Okay, they won't be able to see the long term prospects and the timing signal. So if you want to have that, which is, I think these are very important things that you need to look at when you invest in stocks, do subscribe to our services. So that was about the bot list. So these are some of the critical features that we have for you on Money Works for Me. We also have a watch list where you can have the stocks which you want to watch and maybe invest in going ahead when the opportunity presents itself. Okay, so whatever assessment that I saved, okay, so I had asked you to save the assessment from the 10-year X-ray and the long-term prospects will appear here, okay, as well as the MRP that you can see here. Okay, so how it helps you is in one shot you can take a call. You can just maybe set up buy and sell alerts. So here I can set a buy trigger. I can say, suppose I want to buy ACC at 1000 rupees. I have just, as you can see, I have set a trigger of 1000 rupees and I'll get an email alert. Okay, so whenever that price is reached, I can get an email alert. Similar alerts you can save in your bot list as well. Okay, so as you can see, bot list. Suppose Biocon, I want to buy at maybe 230 rupees and sell it at maybe 350 rupees. I can set up these triggers and save it. Okay, and these triggers will be updated and you will get an email as soon as this as soon as these triggers are reached. Okay, so that was about the portfolio managers. So before we move on to the question and answer session, I'll just quickly tell you about the plans that we have. Subscribers might already be aware of this, but just for the registered users, the plans that we have for you are the top seller plan is Investor Pro 100, where you get access to 100 stocks for 1 year. So any 100 stocks of your choice, you can view the decision maker of these 100 stocks for a period of 1 year. So you can find out whether these are investment worthy stocks. Money Works for Me filter you can use unlimited number of times. Okay, again 10-year X-ray, future prospects, price calculator and company pulse you can check out for 100 stocks. Okay, bot list obviously is a free, it's a feature which you can use irrespective of whether you are a paid or a registered user. So that remains. So that is available only for a price of 4,950. So it's actually nothing compared to the profits that you can make by using these wonderful features. I mean, one correct decision and you can recover the cost within just one stock transaction or or from the profits of one stock transaction, right? The second part that we have for you is Investor 50. Okay, second product. So here you can get similar access to any 50 stocks of your choice. Okay, so you can check out the decision maker of for 50 stocks of your choice. Again, Money Works for Me filter is unlimited access, and whereas the other parts, which is 10-year X-ray Pro, future prospects, price calculator and company pulse, is for 50 stocks. That is available for just 3,650. Investor 25, which is for 25 companies, is available for 1,999. Okay, and then we have the Nifty 50 Superstars, which has actually got a tremendous response over the last 2 months. Okay, where you this is the product that I showed you, the user interface, which is helps you to track the Nifty 50 stocks and gives you the right investment decision for these companies. So that is available for a price of just 2,999. Okay, so compared to 50 stocks for 1 year, which is 3,650, this is a great bargain that you are getting, which is 2,999. Okay, and once you subscribe for this, you get access to the entire list of those 50 stocks. You keep on getting timing alerts whenever a timing signal is generated, right? So you don't have to do anything. Okay, the system will track all these Nifty 50 companies and inform you of any opportunity that arises within these Nifty 50 companies. Okay, so you don't miss out on any great opportunity to buy these companies. Okay, and just to tell you that how these Nifty 50 companies can give you good returns. Okay, here is some proof of how they have given you returns over the last year or so. Okay, so if you see Tata Motors, the Tata Motors stock was at a below discount price. Okay, so we talked about discount price. It was below discount price in October 2011. Okay, it was quoting at just rupees 147, and in March 2012, okay, so that is just a period of 5 to 6 months, it has crossed the MRP. Okay, it has gone above the MRP, which is 290 rupees. Okay, so that gives you a returns of 98% within 6 months. Okay, so you can just imagine a safe stock such as Tata Motor compared to all the other small cap and micro cap companies that we invest in gave you returns of close to 100% within 6 months. Okay, your money would have doubled within 6 months if you had invested in this stock. Okay, at below the discount price. Similarly, ICICI Bank gave you returns of close to 52% within 3 months. Okay, then Reliance Infrastructure gave you 77% returns within 3 months, whereas HDFC Bank, okay, another very safe company, gave you 33% returns within 5 months. Okay, so all these opportunities were always there, but as I said in the beginning, we tend to just overlook these opportunities because we are trying to find the next big thing, next multi-bagger, and very rarely do we find it, right? So it's better to have a large portion of your portfolio into safe, known stocks, and maybe with a small portion of your portfolio you can look for the these multi-bagger stocks, right? So that makes more sense, I believe. So that is it about Moneyworks.me and how you can make the best out of it. We'll definitely now move on to the question and answer session, where I'll try to answer all your queries and help you make the best out of Moneyworks.me as well, right? So moving on to the first question from Mr. Dhirendra Kumar Singh. Can you interpret the management X-ray for HDIL, especially with respect to share pledged? Okay, so well, we won't get into details of HDIL with respect to what went wrong, but I think it's a very important thing that you need to look at. I already gave you the example of Kingfisher, where I showed you how pledging of shares had resulted in the drop in the promoter holding. So what I can do is I can just show you the pledging chart for HDIL. Okay, so as you can see, for HDIL, promoter holding was 39% and it dropped to 37% in March 2012, and the pledging is 96.24%. okay, that's a very large amount. Now let's check the timing chart, okay, just to understand how the price has fallen. Right, so as you can see, somewhere around February 2012, the price was close to 130 rupees. Okay, and the price currently is 70 rupees. Okay, so the stock price has fallen by close to 50% within just 6 to 7 months. Okay, and I think the major reason for this fall has been the high pledging level. Okay, and I think it's just the beginning, because if you see going by the pledging chart and the promoter holding, the promoter holding hasn't dropped much, so most likely whatever shares have been pledged in the market have not come into the open market, so the financial institutions have not yet sold them. So going ahead, if the situation does not improve, you can very well expect that this promoter holding will come down more, and the price will fall further down. Okay, so if you are invested in this stock, just be very careful and take a decision whether you want to stay invested in this company or not. Next question is by Abhidit Sharma. I understand the concept of MRP, but want to know at what at least percentage below MRP should I buy, right? So the question here is about what is the percentage of discount or the margin of safety that you should be looking for. Well, the answer to this question is that margin of safety is a very stock specific thing. Okay, to give you an example, consider a company such as HDIL that we saw, and another company like suppose say ITC. Now if you compare these two companies, it will be very easy to understand that ITC is a safer bet than HDIL. Okay, why? Just consider simple things like the business. So ITC is maybe in the cigarettes business or FMCG business, which is very consistent, very predictable, not many ups and downs. Okay, so even if the growth is not there, it will not be drastically lower, right? Whereas for HDIL, maybe in the infrastructure, construction and infrastructure business, it's a very high risk sort of business. Okay, debt will be higher, whereas for ITC debt will be lower. So there are many business specific things which you need to consider. So a lot of these things together amount or together determine what is the margin of safety that you should be looking for. At Moneyworks for Me, what we have done is we have looked at such stock specific factors and arrived at stock specific margin of safeties. Okay, so to give you an example, I'll just show you ITC and maybe HDIL. So for ITC, the margin of safety that we have taken is just 17%. Okay, whereas for HDIL, this margin of safety is as high as 50%. Okay, so as I said, it is a very stock specific thing, and you can check out the different margin of safeties, or you can get this margin of safety on Moneyworks for Me, right? So what I can ask you to do is subscribe, and you'll get access to all the different companies, and you can check out the margin of safety. A follow-up question by again by Mr. Abhidit is, I am a very new investor. What should be my initial portfolio value, diversification, and what is the percentage of return I can expect? Okay, so he's already a subscriber of combo pack of Nifty 50 and Investor 50. Okay, so thank you for subscribing to our services. Well, if you are a new investor, I think initial portfolio value will be actually dependent on some other things, like what is your income and what is the percentage of income that you are willing to put into equities and so on and so forth. So I can't really comment on that without knowing many other such details. So it wouldn't be right for me to comment without getting such details or whether knowing such details. So for others, what I would suggest is, as far as diversification is concerned, some of the important things that you should always keep in mind is not more than 20% in one stock, which I told you about when I was showing you the bot list, and not more than 25% in a particular sector. Okay, largely try to be in the large cap stocks, try to invest in large cap stocks. Okay, preferably Nifty 50 stocks. Why? Because these are safe companies, and the current economic scenario is such that you don't know where the market will be in the next 2 or 3 months. Okay, so mid cap, small cap stocks, while they can give you great returns, if the things turn bad, they can also make great losses for you. Okay, now one thing that I request all our users to do is to get this risk profiling done. Okay, so what we have done is we have launched a tool where you can find out your risk profile. Okay, so the earlier question that I was answering was also about portfolio value. So the portfolio value and what type of stocks you invest in also depends on what is your risk profile. So if you are an aggressive guy, maybe you need to move into mid caps and small caps, whereas if you are a very conservative guy, you just need to stick to large caps. So our tool, which is about risk profiling, will help you to find out what is the right mix of stocks that you should take. Okay, so do check this out. It's just when you come to Moneyworks for Me, just go to upgrade or subscribe page. Okay, right hand corner you can check that, and just scroll down and you can find it here, which is wondering which plan is right for you. Click here to find out. Okay, so do check that out, and you can just take a call based on whatever input we give you based about your risk profile. Next question is from Mr. Parag Storwala. Can we export from Excel sheet directly as we maintain in Excel? Well, currently we do not have that feature wherein you can directly have your own specific Excel sheet imported into Moneyworks for Me, right? Maybe soon we'll be launching another related feature wherein you can have that flexibility, but currently you can just export your existing portfolio from moneycontrol.com and import it into Moneyworks for Me. Otherwise you will have to just go ahead and enter it one by one, which is not very difficult to do, but obviously it's not as easy as importing it from, say, Money Control. Okay, so if I had to add a stock, I'll just click on add stocks after going to the bot list and search for some company. So for example, if it's Infosys, right? I can just write Infosys and the name will show up, right? So that way it's relatively easy, but maybe you'll have to wait for some time to get that flexibility. Next question is from Vipesh Devre. He wants to know whether in the Nifty 50 Superstar package, will he be able to change the 50 company anytime? Well, that flexibility is not there. Why? Because it's based on a fixed list of 50 companies. Okay, so this is a list of the 50 companies which make up the Nifty index. Okay, this index is maintained and created by NSE, which is the National Stock Exchange. So it is a predetermined list of 50 stocks. Okay, so if you want to check out companies beyond these list of 50 companies, this won't be the right pack for you. What I would suggest you to do is buy this Nifty 50 Superstars. Why? Because as I said, these are very important companies that you should not overlook, and buying this package gives you access to that wonderful user interface that we have. And then maybe buy an Investor 50 or maybe an Investor 25 if you require to check out companies which are beyond the Nifty 50 list of companies. Okay, so you can do that. I think that would be very useful. That will help you a lot in terms of giving you the flexibility to move beyond the Nifty 50 companies as well. Okay, next question is from Mr. Vishwajit Akre. How to evaluate a recently listed company like MCX Limited where 10-year performance review is not available? So what I can do is I will just show you MCX. Now MCX has just come out with its IPO, I think sometime last year or maybe the year before that, I'm not exactly sure. So actually for MCX, what you can see is on Moneybox you can find the 10-year X-ray. Okay, so the performance that you have is almost for 7 to 8 years, and with another year coming in, it will be available for almost 9 years. So that is not the problem. You can definitely arrive at the color coding or the analysis of the 10-year X-ray of MCX. What I would tell all the users is, we at Moneybox, what we do is we look at we color code a company provided there is at least 6 years of financial data. Okay, 6 years of consistent financials. Reason being, if the company has just listed or if the company has just say 2 or 3 years of data, you are not sure whether the company can do well in good as well as bad times. 6-year period is a good enough period to understand how the company's performance has been through ups and downs. So at least the minimum that you should be looking at is a 6-year period, and the maximum or the ideal period is 10 years. Okay, so that is sort of the thumb rule that we use, and I think that is something that you should also follow. Next question that we have is by Mr. Gajendra Sampath. How do you access investor friendly companies? Well, I mean, it's a bit subjective. I mean, how do you define investor friendly? Maybe something like companies which give high dividends could be termed as investor friendly, but currently we do not have sorting based on maybe dividend yields or any other such features, but we are definitely looking at that, and we'll consider how we can introduce that field, which is dividend yield. Okay, then the another question by Mr. Gajendra Sampath is, what about companies not assessed or covered by our analysis? How does a subscriber decide about buy or sell actions? Okay, now what we have done is we have largely covered the BSE 500 companies. Now BSE 500 I think accounts for close to 90 or 95% of the total market cap of India. So I don't think many users will need to go beyond BSE 500 companies. However, if you have some small cap company which is not within the BSE 500 company, you can definitely check it out. The Investor 50 and Investor 100 packs that we have for you. Okay, they give you the flexibility where you can check any 5 companies beyond BSE 500. Okay, so you can get you can check out those companies, and if the valuation guidance is not available, we can provide you that. But again, one small disclaimer here is that if the company's financials are really erratic, or if the company does not have adequate years of data, right? Like I told you, if we look at least 6 years of data, so if the company has just say 2 or 3 years of data, we won't give you a evaluation guidance. However, your account won't be extinguished, your account will be again given back to you. So it's like you'll get another company that you can check beyond BSE 500. So don't worry about that. If you subscribe for the Investor 50 and Investor 100 package, you do get to check 5 companies beyond BSE 500. But again, one tip that I would give to all users is try to stick to known companies, known entities. Don't try to speculate in going by tips, recommendations, something like that. Next question by Mr. Vipesh Devre. Is there any facility to receive an email alert of Nifty 50 to subscribers of Nifty 50 Superstar? Yes, there is. In fact, Nifty 50 Superstars subscribers keep on getting any timing alert that will be generated for the Nifty 50 companies. You can set up triggers. So what you can do is you can just go to Nifty 50 and maybe set up buy or sell triggers if you want, right? So Asian Paints, maybe you can set up some buy or sell triggers, click on email and then just say save. Okay, so for example, Asian Paints, if I want to sell at say 3800, I'll just save that and update the trigger, right? So you can keep on doing this. Any timing signals that are generated for the Nifty 50 companies, will be informing it to you, right? Other than that, you also can find it here, right? Top Nifty timing alerts. So you can check that out, right? And you have access to that. Next question is, if I had set buy alert, how can I change it to sell alert, right? So let's I believe that will be in the bot list. So suppose you bought a company, okay, let's take a situation where I have a company in my watch list. Okay, so as you can see, I have set a buy trigger for this for ABB, right? So what I can do is I can just delete this. Okay, so my buy trigger has gone, right? And now if I have the stock in my bot list, okay, I don't have it, but I'll just add it. So how the process goes is, I have the stock in my watch list, I get the buy trigger, so I'll buy the stock. Okay, hopefully if it is a good investment, I'll go ahead and buy the stock. So I'll just enter it in my bot list, ABB Limited. Suppose I bought it today, I bought 100 stocks at 300 rupees. Okay, and I just saved it. Okay, so now I have ABB in my bot list. Now I can set up my sell trigger. Okay, so just go to the bot list and I'll set my trigger here. So the current price is 722. Maybe I want to sell it at 800. Okay, I'll put the figure here in the sell trigger box, click email and just save. Okay, and my sell trigger has been saved. Okay, if I want to buy further, if the stock price falls, I can just again set triggers here. So if I want to buy when it's 600, I'll put it as 600 and click save, and my triggers will be updated, right? So whenever these triggers are used or are generated, you can just again delete them. Okay, if you get a mail telling you about the trigger. Next question by Mr. Again by Mr. Gajendra Sampath. What should be ideal number of companies in one's portfolio? Well, that number should not be it depends upon again your portfolio size, but maybe say for a portfolio of maybe 2 to 3 lakhs, maybe something like that, the number of companies should not be more than 10 to 12. Okay, on the higher side, maybe 15 companies at max, right? But you should not go more than that. Ideally keep it to somewhere around 10 to 12. There are some people who are very or very specific or have very specific companies in mind and very choosy about the companies. They have say something around 6 to 7 companies in their portfolio, but roughly a number around 10 is a good number to have in your portfolio. Okay, so next question is from Mr. Arvind Khatri. Can you tell me details about timing alerts? So I'll just quickly tell you about timing signals. So I'll just check out some company. Now timing alerts is actually can be seen by so the timing chart can be seen by registered users. So what is timing signal? I'll just show you. I'll just take up say Infosys again. So the timing chart, now this is the timing chart. Here I can see this is the price line, the red line is the MRP and the green line is the discount price. Now what we have done is we have combined the best of both worlds, which is fundamentals and technicals. Now if the stock is in the buy zone, okay, if it's close to the discount price, and if the technical indicators indicate that the stock is now going to move in an upward direction, okay, there is a very high chance that the stock will start moving in an upward direction, a timing alert is generated. Okay, so the timing alert is not based purely on technicals, it's also part of it's also a bit of fundamentals that's going into the logic here. Okay, so if that trend shows you an upward trend, you consider buy or a strong buy signal will be generated. Similarly, if the stock price crosses the MRP and the technical indicators show that the stock price will fall now, a consider sell or a strong sell signal will be generated. Okay, now what is the logic or why should you wait for a timing signal? Okay, I've had quite a few people ask me that if a stock is at a discount, why should you wait for the timing signal? Well, the logic here is, I am sure this might have happened with many of you. We find a stock which is available at a very attractive price and you buy the stock, and due to some of the other news, the price starts falling further. Okay, because the market in the short term is quite speculative and acts like a voting machine, right? So it, because of the sentiments, because of speculation, the price starts falling, and soon you will see that you will be sitting on huge losses, and that time actually your analysis, your discipline, everything goes for a toss, right? You might panic, you might not know what to do, right? And then that leads to poor decisions, right? You might stay invested in the stock, you might maybe buy more just to average out, so you don't know what you're doing, right? So the timing signal aims to what it aims to do is it tries to protect you from this phenomena, right? So if there is what happens is, if the stock is at a discount price and the stock is in a downward momentum, okay, downward trend, the timing signal won't be generated. Okay, the buy signal won't be generated. Only when this momentum reverses, okay, and the stock starts moving in an upward trend, will the timing signal be generated, right? So that's the beauty of the timing signal. Another thing that you can use to protect yourself from losses is a stop loss concept, right? And soon that concept, or soon the stop loss phenomena will be launching on our site, wherein you can set up a stop loss. So if you invest in Infosys at say 2300 rupees and you set a stop loss of 10%, so if the stock price falls below 10% of 2300, you just get out of the stock, and then maybe again reassess and see whether something has changed with the company, and then maybe re-enter the stock. Okay, so that way you can use the stop loss concept to protect your losses. Okay, now we'll take the last question because we are already running out of time. Right, the last question which we have is again something related to what I was just speaking about, which is after buy signal is generated, I notice the price goes down significantly. Why should that happen? What's the time period for the action to be taken after the signal is given, right? So I think that happened with Infosys as well. That is, a buy signal was generated, the stock price went up for some time, and then again it crashed. Okay, well, as I said, the market is very irrational in the short term, right? So most likely it can happen that the stock is at a discount, a buy signal has been generated, so there was a short reversal in the trend and a buy signal was generated and you buy the stock, and then again some news comes in. With Infosys it keeps on happening, the company declares some quarterly results which do not meet the expectations of analysts, and the stock price gets hammered, right? So in that case the stock price starts falling. So does that mean that what does that mean basically? So what I will tell you is, this will keep on happening. No matter who gives you a timing signal, or no matter what kind of research you do, you cannot protect yourself from the short term irrationalities of the market. Okay, or you cannot totally insulate yourself. One way to protect yourself to a certain extent, as I said, is use a stop loss, so that when you get into a stock, you have predetermined at what amount you will get out. Okay, without thinking about what's happening. Okay, because when you are invested in the stock, you tend to not take the right decisions, right? Because your behavioral biases get into action. So to protect yourself, it's a very good discipline to follow, that set up a stop loss, buy a stock at a particular price, set up a stop loss, and if that stop loss is triggered, get out of the stock. Okay, and then you can just very objectively look at the stock again, look at where did your analysis go wrong, or is it just that the market is speculating and it's a market inefficiency, right? If it is due to the market being speculative in nature or the market being irrational, you can then again consider getting in at a much lower price. Okay, but always remember that this stop loss has to be followed, right? Why? Because you cannot insulate yourself from the short term irrationality, right? But at the same time, when you are confident that your analysis is right and it's the market who is wrong, you also need to have that conviction wherein you buy the stock, you go against the herd mentality, you go against the crowd, you buy the stock and hold on to it for a long term period. Okay, don't expect that you will get returns within a short term. Okay, for a company like Infosys, in the short term, when many analysts are when the reports or the current or the quarterly results are not going to be very good, in the short term you are not going to get many or get very high returns. But over the long term, if your analysis is correct, if whatever has been given in a company pulse, whatever that tells you that the long term is very good. Okay, so the company has not lost its competitive advantage, whatever has enabled it to grow in the past. So if that is correct, over a period of say 1 or 2 years going ahead, or maybe even higher than that, you will definitely get good returns. So you need to have that conviction, you need to have that confidence. Okay, but going ahead, if the company does not meet its expectations, you always need to change your opinion, right? So as there was a very famous saying that I change my opinion as the facts change. So you always need to keep that mind. You don't need to get married to a stock, right? You have that flexibility here. You are not married to a stock. If the facts change, you have to change your opinion. Okay, so it's a very dynamic thing that you have to keep on tracking, keep on studying it a bit, and Money Works for Me, whatever tools that I showed you will help you to do that with considerable ease. Okay, so that's it for today. I thank you all for attending today's webinar. Once again, I'll just as I showed you, we have very we have plans which give you a lot of value, and you can make very good stock investment decisions with considerable ease. Okay, and once again I request you to do check this out. A very useful tool that we have for you, risk profiling. Do check that out for sure. It will help you to understand what is the mix of stocks that you should be investing in it. Okay, so do check that out, and we have a blog which is Stock Shastra, so you can definitely read more about stock investing here. It's a free blog, so you don't need to be a paid user to access this blog. It's free for all. Just check that out. Okay, so we'll keep on talking about a lot of other things. One small thing which I'm forgetting, a very new announcement that we have for you is that we have launched a mobile application. Okay, so all of you who have Android phones can just check this out. The application is called My Stock Genie, and it is a wonderful application which can help you understand which is a investment worthy stock on the go, right? You can find out whether a company is worth investing on the move. So you are just out of you do not have access to your computer, you have just the mobile in your hand. You can just check out a particular stock, and it's a very useful feature. You can maintain your bot list, right? You can maintain your portfolio managers on the move, and it will be synced with the managers that you are maintaining on the site, right? So all the data is synced, so you can just add or edit your bot list, buy and sell stocks, and change your managers accordingly. So do check that out. Once you just come to the home page, you can't miss this part, which is the mobile application. So do check that out as well. Okay, so that's it for the day. If you have any queries, you can just get in touch with us. I'll just show you our contact details. So you can contact us. This is our phone number 02067210600. You can chat. You can have a live chat with our customer representative. Okay, from 10 to 5:30, or you can email us at customercare@moneyworksforme.com. Right. So as any query that you can have, you can just even fill on this right side portion, and we'll get back to you. Okay, we'll just solve your queries, whatever queries that you have. So do check our site out, and I'm sure you'll find it very useful. So that's it for the day, and do join us for our next webinars. Thank you.